Hi, everyone. I welcome you to our discussion on this topic, which is Ind AS 8, accounting policies, changes in accounting estimates, and errors. Friends, we know that there are a set of financial statements that we are required to prepare, which would include, for example, a balance sheet, a statement of profit or loss, statement of changes in equity, statement of cash flows, and the disclosures and the notes to accounts, right? Amongst these financial statements, where we talked about, of course, the presentation requirements, the measurement requirements, and then the disclosure requirements, right? So all these requirements would want us to consider, on what basis are these financial statements prepared, right? What are those rules? What are those policies based upon which we are preparing these sets of financial statements, right? When we look at different accounting standards, so there is an accounting standard on property, plant, and equipment, which suggests that you can use maybe a cost model or maybe a revaluation model, right? So that choice is available with that standard, but somewhere we need to explain that whether we are using the cost model or, for example, the revaluation model for some or all of these property, plant, and equipments. Okay. Similarly, we talk about an accounting standard like inventories in Ind AS 2, right? Over there, we have some permissible methods of, let's say, valuing the inventory, which could be either a FIFO method or a weighted average method. Okay. So again, we are using those policies as provided under that standard, right? But then we need to somewhere explain and disclose those aspects, and that is what basically Ind AS 8 gives us a guidance on, in terms of what kind of accounting policies are we using, for example, and how do we select those, and can we change those? Could be an important question as well, right? And if we change, then how do we do the accounting of that change as well, right? So somewhere when you look at this particular standard, there are, of course, what we want to kind of convey here is that there are different standards that provide, for example, choices of the accounting policies to be made, right? But now we start asking ourselves, is it always clearly evident that the choice is there within the standard, right? It could be a case that there's a peculiar situation, there is a particular situation where you are not sure in terms of what could be the most appropriate accounting policy choice for you. Okay. So if the standard does not give you that guidance, where do you go on that, right? Are we going to look at some other standard within the Ind AS? Are we going to look at the conceptual framework for that matter? Or can we go outside also? Maybe there is something given under the IFRS's framework, or maybe the US GAAP framework. Can we use those aspects, right? So it could be a very open question. It could be a very a difficult question to answer straight away. That first of all, I want to prepare my set of financial statements. On what basis do I do that? So maybe there is a literature I can find in the specific standard, or some other standard within the Ind AS. If that is not available, then probably I need to look at the framework, or might be there is an option to even go outside the framework and look at some guidances which are applicable globally, like as we said, IFRS is the International Financial Reporting Standards, or maybe even the US GAAP, right? So somewhere Ind AS 8 would try to address these questions, that what is actually the meaning of an accounting policy? Can we change those if at all we can, right? And then how is this change brought into the accounting, right? What do we do? Because end of the day, if I say I want to use an accounting policy in one accounting period, and I want to change it in the next accounting period, my very basis of comparability is lost. Okay, so I have to give regard to those, attributes of financial statements as well. Something that we studied, so clearly under the framework guidances. Right? We talked about the reliable measurement, the comparability, the completeness, and all these aspects. Right? So it would become an important question to answer, on these parameters, that what exactly is the basis of preparation of the financial statements, or the measurement criteria, etc. And then we look at, of course, the changes in those. To what extent can we change, or are we required to change accounting policies in some scenarios? Okay, that's one of the things that we want to bring along when we discuss this particular standard, right? But then it doesn't stop there. We also start talking about that there are some estimates that we make. We make some calculations about the future, right? We make some assessment about what is likely to happen, and on that basis, we would be changing our accounting as well. One of the easiest examples I can think of is the calculation of expected useful life of, let's say, a property, plant, and equipment, or an intangible asset. Or maybe you're talking about also a warranty provision, right? If what I was thinking today, which was my estimate about future, and in the next accounting period, in the next year, for example, that estimate about the future changes because the underlying circumstances have changed, right? Say, for example, I was assuming that I have a machine that is expected to have a life of 10 years, right? So I'll be charging my depreciation accordingly on the basis of this 10 years. Let's say after 1 year, I believe that the economic life is hardly 4 years remaining because there's a complete obsolescence of the technology. There's a new type of machinery has come, and this machine cannot offer me the returns beyond next 4 years of time. So this delta or this change, which, okay, after 1 year, it would have become 9 years. So from a 9 years to a 4 years of life, how does this change in the estimate? How is this change in this accounting estimate to be brought into the financial statements? Is again another important question that we want to highlight. Okay, so we'll be talking about that when we discuss this standard. And then we talk about errors, right? And when you say error, I really want you to go back and think about those, basic errors that we used to, talk about. Error of omission, error of commission, error of principal, right? There could be, a reversal entry, right? There could be, at least in the manual books of accounts, we used to have these partial entries, or let's say, the placement of the numbers there. So, the carry forward, etc., goes wrong, etc. That's something which was more common in the manual books of accounts, not exactly possible in case of computerized environment or an ERP environment. So when you look at these errors, and by the way, including intentional errors also, right? So you talk about frauds, for example. In case an error is identified, in case a fraud is identified, then how do we deal with that? Well, the easy part is correct that. You can't carry a mistake in the books, right? Well, it's easier said than done, because it can happen that the error relates to an earlier accounting period. The books are already closed, right? Accounting is already done for that period, and the error pertains to that period. Then how do we deal with that part? That is something. These are all sets of questions that we need to answer, and that we would answer, of course, looking at Ind AS 8, which is accounting policies, changes in accounting estimates, and errors, right? So expect the kind of questions so that we could apply. For example, the principles under the selection of accounting policies, treatment of changes in accounting policies or estimates, or rectification or correction of these prior period errors, the key differentiation between these three separate sets of items. And finally, look at, there is some aspect that we're going to talk about, a retrospective change, right? Then how do we look at this retrospective change in reporting, and what could be the possible challenges when we want to bring that retrospective impact in the financial statements, right? We'll do that all with the help of several discussions and examples on each of these parameters. All right, thank you very much.